Hey everybody, good evening. It's about 6 p.m. here on Saturday the 3rd of February 2024. I'm just going to do a real quick update on the S&P 500. I'm going to keep this one real short and sweet and to the point. All of this content, of course, is my own opinion. I'm not your financial advisor. You're responsible for your own trades, manage your own risk, doing your own research. Always just my opinion on the market. If you want access to our indicators, our education, our trades, both crypto, stocks, and day trading options, which we have been absolutely destroying NVIDIA over the last roughly 4 weeks. If you want access to all of that, you can find all of the information on BitDoctor.org. I'm not a sales guy. I'm not here to, try and over market something. I'm just here to help. I'm here to be an ambassador, and I'm here to educate the community and to help you understand the way that the markets work. And it's as simple as that. So BitDoctor.org is where you can find all of that information. And let me just go ahead and move on into our lovely little chart here. Okay, so from an Elliott wave perspective, we are in the middle of completing our third wave, and this third wave is the basically an ending diagonal, which we are watching here. We're watching for signs of there being an ending diagonal going up here to wave 3, going down into wave 4, and then of course going up to wave 5, which should terminate somewhere around 5,800 to 6,000, somewhere in that area. And of course, as you all know, this kind of stuff can absolutely extend, and it can expand, and so all kinds of things can happen between now and then, which is why I'm not so concerned about where the target will end up, more than I'm concerned about where the market's going to go over the next couple weeks. Lots of great things have been happening to the stock market and to generally all of the economic factors, whether it be employment numbers, new hires, interest rates. We've got Meta that's doing dividends, doing stock buybacks. Everything is just wonderful. Lots of really, really positive news last week. So what that means is more than likely next week isn't going to be as green as the current the current sentiment is, which is pretty pretty positive. So I would expect that the rally that we had, especially at the end of the week last week, is likely going to terminate very, very soon, and I want to outline some of that for you right now. So from all the way down here in the October lows, it appears as though we are going into 1, 2, 3, 4, 5, up here into an A. I want to measure the time it took to complete from wave A to wave B here. So this is an ABC. It's very, very corrective. I think we can all agree that this is a corrective move. Let me go ahead and get my date range here, and I'm going to go right from here, from this point to this point right here. I want to recognize that it took 103 days to correct this wave A to wave B, going into our wave 1. Okay, how long did the correction take to go from wave 1, which again is an ABC, because in your ending diagonals you go in like a 3 3 3 3 3 3, or sorry, 3 3 3 3 3 pattern. And how long did it take for us to complete this correction? Okay, well, let's just go ahead and take a look at that, because I think the context here is important. It took about 92 days, so a little less time than it took to complete this this first correction. Okay, so we've completed that, and the reason why I'm looking at this as an ending diagonal at this point is because this was very corrective. This overlapped these waves here, which is it's an overlap, which makes me, from an Elliott wave perspective, try to treat it as though it is a diagonal. So I'm not going to get into too much on geometry and the order of operations from when I'm analyzing a chart, but this does look like it is favoring a diagonal of sorts. So what does that then mean? All right, so we've got an ABC up into a 1. You have an ABC down here into a 2. So we've got our 3 and our 3. We're going to be working on another 3 to complete this wave 3. But we don't have a B wave here yet. So if I zoom in and just take a real quick look at what the wave structure looks like right here, I mean, certainly you can count this a number of different ways. I tend to count this as a 1, 2, and then potentially a 3, 4, 5, right here into a 1, and then a 2, and then a 3, and then go down to a 4 and up to a 5. Now, if that's the case, yeah, we're likely going to go a little bit higher. How long is that going to take for us to poke a little bit higher than we are? That might, excuse me, it will probably happen early in the week next week. I believe whatever burst we get on Monday or Tuesday is probably going to be something that is going to be valuable for a short. Now, how you do that is completely up to you. If you want, some guidance, I won't say advice, but if you want some guidance, if you want assistance on how to analyze the charts, Discord is where to go. Go into our general chat. I'm happy to answer any questions that arise from there. But all of these time frames look very, very, very overbought. And so I have some concern about that. And from a wave structure standpoint, if we count this as a 1, 2, and then 1, 2, 3, 4, 5 into a 3, ABC here into a 4, this is very clean, 1, 2, 3, 4, 5. And if I go down to a 1 hour time frame, I just want to look at the wave structure from this wave right here. So we've got a 1, ABC down here into a 2, and then 1, 2, 3, 4, 5 here into a 3, and then we've got a quick wave down here to wave 4, and just pay attention to where this landed. Right here at the end of the day on Wednesday after FOMC, we landed here at the 382. Now, from there, obviously, I'm going to state the obvious here, one of two things was going to happen. One, we were going to break that 382 and go down, or two, we were going to bounce off of it and probably have a significant move to the upside where the target for that is going to likely be 49.84. And so for right now, that is going to remain what our target is going to be right there at 49.84 at the negative 236 extension. And of course, this can be measured a number of different ways. You can measure it based off of the 382 pullback to the negative 236 extension. You can measure this from the bottom of wave 1, take it to the top of wave 3, which is roughly right there, take it to the pullback of wave 4. And what you're wanting to do is you want to measure the 618. So let's put the 618 on there. That 618 is going to be right here at exactly 5,000. 5,001.47 to be exact. So this area is prime for there to be sellers to be kicking in. Right here in this area, more than likely, we're going to see some significant sellers kicking in this area. That's going to be where algos are going to be sitting. They're going to be waiting, and that's going to be perfect for this wave 5 to complete. So from down here, you've got a little 1, 2, and then a 3, 4, and then maybe a 1, 2, 3, 4, 5 here that maybe goes into Tuesday, right? Once we get up into this area, and I'm on an hourly time frame here, and you can see that the green hourly wave is, kind of poised to go down a little bit. The yellow wave, it tends to have a little more momentum behind it. It takes a little bit longer for it to get up there. So I can totally see us doing something along this line where we're probably going to see let me just go ahead and path this out. We've got this 1, 2, 3, 4, 5. And then we start the correction, which is going to take us down here into our B wave. And again, I said that I would be quick, and so I'm almost done here talking about the S&P 500. So we have a comment on the video asking about Bitcoin, and maybe some alts. Maybe I'll have some time to get into some alts here, but I will focus a little bit on Bitcoin. So the reason why I wanted to measure the time it took for some of these corrective moves to occur. So this was roughly 108 days. This was roughly 90 some days. How long is it going to take for this correction to complete? Because really what we're looking at, I'm going to go ahead and just clean this off because now that I've got that on there, I don't need to have my fibs on here because I've got my area of interest right here, which is going to complete this wave 5, which is going to complete wave A. So we've got wave A going down for a wave B, and then we're going to go for wave C. And how long is this going to take? If it took 108 days to complete this, 90 some days to complete this, how long is it going to be from here to our pivot point? Right, that's 70 days. So if these corrections continue to take shorter amounts of time, this makes a lot of sense. So I say that because even though this pivot point is April 15th, does not mean that wave C is going to be there. It could be that wave B actually ends up there, and this could just take time to get down here before we see that move up to wave 3, which could come all the way out here. Let me move this over here. Likely this is going to be the scenario based off of, we're going to have to wait and see, right? We're going to have to wait and see how long it takes to correct, and if we even get down here to this corrective zone. If it takes a long time, we may even go just a little bit lower. We might see some overlap with this high back here. One way or another, I am expecting there to be somewhat of a correction on the S&P 500. Now, again, looking at this area up here, right around 5,000 for an area of a rejection, and maybe to start a month or two correction. And this is going to flow into Bitcoin as well. So I do want to talk about Bitcoin, before I finish this up. But one way or another, wave A, then a B, and then we go to wave C, which I'm expecting to be the completion of wave 3. Then we're likely to come right back down to wave 4. Now, this wave 4, I am expecting there to be potentially some overlap with this wave 1, or it's going to be kind of shallow and maybe just retest the previous all-time high, which is about 48.18. That would make a lot of sense. And then we can go up for the all-time high, which is more than likely going to be the termination of the cycle, which is a grand cycle on the S&P 500. This is likely going to go into 2025, and it's probably not going to happen until, if I'm measuring this roughly, it's probably going to happen sometime in March or April of 2025, which does match up with what I'm expecting for crypto to do as well. So let's go ahead and take a look at our good friend Bitcoin. Okay, looking at Bitcoin on a daily, I've got a lot of stuff on here which I will, we'll discuss this a little bit, because we were talking about that pivot window occurring at the end of February. And so that end of February is right here. We've got the halving that's coming up in April, okay? So I'm projecting that we're going to be in a channel of sorts, right? And I'm on a daily chart, so things are very fluid. And I had mentioned back when we were down here below these two trend lines that if we moved up faster, that would be a little more bullish. We rejected, and we are back we're not exactly below, but we are very close to these trend lines. So I'm not ready to say that this is a valid scenario where we're just going to go straight up from here. But what I will say is, if we do get into this zone right here, it is going to be primed for a rejection. I am not planning on being super bullish on Bitcoin for a little while. And there are several reasons for that. I'm going to remove these trend lines for the time being. I'm actually going to also remove this channel because I want things to be just a little clear on what the market looks like it wants to do. So it does look like we are in the completion of wave A. We're going into wave B, and then we're going to go down to wave C, which is going to be this wave 4. And if we look at this from a fib perspective, okay, from the top there to the bottom there, we've got the 618 at the top, and if I had to guess the 50, I know we've already kind of gone through this in previous videos, but the 50 is right there. So between the 50 and the 618, we're likely to get a rejection from there. That 618 is basically the top right here back on December 8th. So we get up there, right? So we get up here. That's going to likely be the completion of this wave, which is then going to get us down here into wave 4. Okay, so I'm going to go ahead and remove this because this is now basically what our projection is going to look like. And again, for the S&P 500, same thing, right? We are expecting maybe the next couple days to kind of, get us up here just a little bit before Bitcoin likely makes that move down, and we'll probably take alts down a little bit with it. I do not suggest leverage. I don't suggest being reckless with trades. I highly suggest being protective. Go into protective mode. I am not holding any Bitcoin with the exception of the little bits that I buy every single day. But the majority of my Bitcoin holdings are currently sitting in cash because I am expecting there to be downside before I'm expecting there to be upside. Now, if we do get a breakout, well, I will go back and reevaluate. But for right now, this is my primary, and I've got no reason to believe otherwise right now. So from up here on wave 3, we've got a wave A, we've got wave B, and then we're going to go down for wave C. And once we get this, I do believe we're going to be close to the end of the corrective cycle, and it's more than likely we're going to probably start to see another move to the upside. Now, this is going into the halving, right? So we've got this target up here, right? Potentially closer to all-time highs. We will have to wait and see. I'm not saying we're going to all-time highs. Nobody can predict the future. Tons of people have said Bitcoin's going to $1 million in 2018, and guess what happened? It went to $3,000. It didn't go to $1 million. We're still nowhere near $1 million. Now, we're certainly closer than we were in 2018 and 2017, but fact of the matter is, people are wrong all the time when it comes to predicting markets. It's really a fool's game. But if you trust your tools and you are able to, you trust your tools and you understand the way that your tools work, then you can be successful and give yourself a little bit of an edge. For right now, all the waves look like they are ready to move down. The yellow wave, the red wave, even the white wave here on the daily, it looks like it wants to move down. So we could be going down for quite some time going into the end of February. And very similar to how I'm expecting the S&P 500. And it might take longer for the S&P 500 to correct. But Bitcoin has been correcting a lot longer than the S&P 500 has. So Bitcoin may be close to being done, while the S&P 500 might still have a little longer to go. The S&P 500 might just be moving sideways while Bitcoin moves up. Heck, that has happened, all of 2023. Bitcoin is up way more than the S&P 500 through the year 2023, or I guess I should say in the year 2023. Relatively speaking, from a percentage return standpoint, Bitcoin has done very, very well. And we're sitting here at like roughly $43,000. Bitcoin doesn't look bad at this particular juncture. I don't have any reason to be super bearish, but I do have reason to believe that we are going to continue to see a little bit of a correction. And as we all know, crypto does not disappoint when it comes to crashes. And so that's why I'm saying leverage is bad. Unless you see a black swan event, or unless you see this correction naturally, descending down to the mid 30s, I would be very cautious with long positions, because you've got a lot of people that are long. Certainly there's a lot of people that are short from up here, but whatever does happen, it likely will come right down here to this area, which is going to be in line with where this clustering is. I'm not going to throw a volume profile on here, but I bet you would see some high volume nodes in this area, which are going to act as support. Very, very likely we come down here before we start to see that move up, and I will be ready to buy back down here. I'd be more than happy to buy down here, get my Bitcoin back. I also sold all of my Ethereum. I'll be happy to get that back as well, as long as all of my rules do get satisfied. I'm waiting for my indicators to look good. I'm waiting for my Fibonacci ratios to look well. All of this looks like if everything all looks like it's coming in line, I'll be happy to buy. And historically speaking, we will move either up and sideways into the halving, or we'll have a crash before the halving. If this all happens before, you better believe I'm going to get in. Because obviously it happened in 2020 because of COVID, right? But these things happened several times, in the past. Of course, I say several, and Bitcoin has only gone through just a few halvings. But, getting a nice move down and then move up and sideways into the halving would be really, really great to see, a bigger move to the upside, right? A bigger move to the upside, and I'm not gonna go so far as to project where I think Bitcoin can go, but where I'm kind of expecting a termination of the cycle, at least in 2024, early 2025, I'm kind of expecting to terminate somewhere between, and this is going to be a wide range, right? We're going to have to take it day by day. I'm expecting it to terminate somewhere between 80 and 120. Maybe it doesn't get that high. Maybe it goes higher. As I mentioned before, nobody knows. All we have is our tools and everything that we use to try and predict where the market is going to go. We are trying to get an edge on the market, because that's really the only way you can make money in this market. And if you see the herd coming in, if retail starts to show up, and I'm sorry, If there's retail investors that are watching this years down the road and you've lost a ton of money, I apologize ahead of time. But if retail comes in again and gets all hysteric over Bitcoin or Ethereum or Cardano or Solana or whatever it is, that's where you need to get out. Because once your neighbor calls you saying like, hey, what about all these airdrops on Solana? You need to get into that. No, that's the time you need to be getting out. That's the time. It happened with NFTs, right? Paris Hilton went on some TV show talking about NFTs, about the Bored Ape Yacht Club. Yeah, guess what? That was the top. Elon Musk went on to Saturday Night Live talking about Doge when it was like 65 cents. Guess what? That was the top. CNBC was giving instructions to people on how to, onboard using Coinbase or Gemini, whatever your exchange was, to onboard onto crypto, transfer your funds over to Poloniex to buy Ripple when it was like $3.30. Guess what? That was the top. It happens over and over and over again. When that happens, you get out. And that's what we did with Shiba Inu. That's what we've done with several things. It was like a 900, 1,000% trade we had on Shiba Inu. We got it early on when nobody was talking about it. But the charts look good, the indicators look good, and that's the reason why I'm still invested in a lot of alts. Now, certainly about 40% of my portfolio is sitting in cash right now. But I'm leveraged in alts right now, just in case things do tend to go to the upside. All right, so that's kind of what I'm expecting to happen with Bitcoin. All right, so I also had a request for IWM. I didn't anticipate going into Russell, so let's go ahead and see if we can pull up the Russell index and see what we've got on here. If there's anything on there, let's go ahead and clear it out. So the big question is, what's happening with Russell? Well, I think that the upside in Russell is actually pretty significant. What I want to outline here is just a couple different things. I'm going to take it from this guy right here, and I'm going to pull this guy down right there. Okay, and I'm just going to say for just a moment here, I don't prepare these ahead of time. Obviously, I didn't prepare IWM or the Russell 2000 because this was just a request here on the video. So a lot of what I do is all just off the cuff, and it's just basically looking at trends, looking at different chart formations to see if there's anything that makes sense. Right now, what I'm doing is I'm looking for areas where there's significant support and where that might go. And so what I'm looking at here, and actually this is actually quite interesting, is on the Russell 2000, I'm seeing a big fake out right here. I'm also seeing this big fake out down here. Okay, and I'm on the daily time frame. So let's just talk about this for a moment. On the daily, we were moving sideways, indicators were resetting, big spike up. We had a big sell signal here on the daily indicator, and we hadn't had a sell for quite some time, right? We had lots of bad sell signals here. The white wave got up here to the top. So that was, that's a good indication from a long-term perspective that that's probably where you should be deleveraging, de-risking yourself. And what ended up happening, we had a little bit of a poke higher, but again, it was met with some bearish divergence on the red wave, the yellow wave, even a little bit on the green wave. But that white wave was still way up there. We saw things start to reset, and then we had that move up. And again, everything was up here and overbought, and that was the top, okay? Now, we broke down out of this this area, right? So that's right there at about 21. Well, maybe we'll call it 2100. Right there, I've marked it at 2133, right? Because this was where several bottoms were. We broke down and we retested that, and we failed miserably. Okay, so now naturally, your next instinct is, all right, well, what's next? So right here, this was your first sign of hope. Okay, the first sign of hope was here. So we had just a little bit of clustering support there, lots of support here and here. We had some resistance here. We poked through, failed, retested, failed. Retested, failed. Got up above it, but we failed, and we retested it. We started consolidating. We broke up above it. We ended up failing. And then we created this little bit of a bear trap, right? Because we had some support here. We had a higher low here. We had a higher low here. We broke down. We created a trap, created a new low, grabbing this liquidity from down here, right? So we tapped that liquidity, and then we started moving up. But now we've reclaimed this as support. So as long as we can stay above, we'll call it 1900, I'm happy to see the Russell 2000 move to new highs. I believe that Russell 2000 has the most potential for good returns, as opposed to like the S&P 500 or even Nasdaq, where I think that it's going to go through a corrective cycle. Do I think money is going to rotate into small caps from the S&P 500 or from the Nasdaq stocks? It's very possible. But I do see good upside for Russell 2000 so long as it can stay above 1900. If it can stay above 1900, I'm happy holding some IWM. Now, I don't have any, but if I did, I'd be happy holding it because, the chart looks okay. If I go to a weekly time frame, let's just take a look at this from a weekly. All right, so what did we have on the weekly? We had a complete reset right here where the white wave even was all the way down here at the bottom. So you had we'll call it two opportunities really to get in the Russell 2000 all the way down here, 1700 to 1650. Now, was I watching it? No. I'm just looking at the indicators and what they were saying at the time. And, when we were back here, we were getting a weekly buy. And that would still have been okay today. But that white wave was still pushing down pretty hard. And so, usually when that happens, I wait. And it got all the way down here, and it stayed down here for the better part of, 3-4 months. From May to October, so that's even, that's 5 months. It was staying down here. So this was a good, good area for accumulation. Of course, this looks like distribution. And this looks like a significant amount of accumulation that occurred. And then even down here where we had this liquidity grab before it went up and we actually closed, really higher. Back here in December of 2023, that was the, really the highest close that we had since August of 2022. So IWM, I think, looks okay. As long as it stays above 1900, I think Russell looks all right. And where can Russell go? Okay, so let's go ahead and just kind of measure this from the bottom here to the top here, and let's get this pullback right down here, and we'll take it from this low right here. Even on a 100% extension, we're really talking about targets. Gosh, is it really going to go that high? It's like double from where we're at right now. We're sitting at 1962 right now. That target's 4157. Do I think it's going to go that high? I mean, absolutely, I think it's possible. How long is that going to take? I mean, honestly, just take a look at this. We're measuring, this right here. So from down here to the top there, that took 595 days. The correction from the top down here to this bottom, that took 714 days. So cumulative out of all of that, that's going to be about 1,300 days. And if we take the duration of that and we go out, say 61.8%, let's go ahead and throw that on here, fib time zone. We're gonna take it from here. We're gonna go all the way down here, and then let's go ahead and put the 618 on this. So let's go ahead and do this. 1.618. And remove those guys. So this is what we're looking at. This is going to be a top essentially in January of 2026, okay? So if this goes at that trajectory, then really what we are expecting for Russell to do, which is, of course, going to take some time, this is going to go from down here, and it's going to go all the way up here, really by the end of 2025. So this could go for quite some time for that move to go up to 2026, the end of 2025, beginning of 2026. So yeah, I think Russell's okay. For now, staying above 1900 is great. Not saying that it can't get back down here. It certainly can. If it breaks down there, I would expect 1800 is likely going to hold. That's going to be that next area that I would be interested in. I may actually be looking at, at a longer term buy or a leap on IWM if it gets down here, if Russell gets down here to about 1800. So that's my thought on Russell. I think that there is potential for upside, and it's likely this is the bottom. This back here is likely the bottom of this large corrective move that, as we mentioned, took the course of 2 years to occur. From November 2021 all the way down here to October 2023. So that was 2 years it took for that correction to occur. So again, I would expect that that likely was the bottom. What kind of a correction was that? That was 33.5% correction. That's approaching bear market territory from a correction standpoint. But we have had a good rebound, and a little bit of a correction here is not out of the ordinary, and I would kind of expect it to happen. Again, I'm expecting the S&P to correct for the next few weeks. So if IWM does the same thing, I'd be interested in in getting some longer term positions on IWM for a move to make that's a significant move. I'm not expecting S&P 500 to do that. So maybe money is finally going to flow out of Apple. It's going to flow out of Meta. We don't know, but that money has to come from somewhere. So it would make sense for it to come from these mega caps that are likely going to start seeing at some point over the next 2 years. At some point, they're likely to see a pretty significant correction. So we'll have to just kind of wait and see what happens. Okay, that is long enough. I've been going for half an hour here. I really only wanted this to be like a 10-minute video, but as per usual, I took just a little bit longer than I expected. So I'm going to go ahead and end things here. If this video helped you in any way, shape, or form, you know the deal. Like, subscribe, share. Share with your friends. We'd love to see you on the Discord if you're not on there. You can find all of the information on how to access our Discord server on BitDoctor.org. And you can always send me a DM on Twitter or on TradingView, whatever platform you use. I'm always here to help. And last but not least, wherever you are in the world, I hope you're having a good day, a good night, and a great evening. Take care, everyone.